Michelle, first your reaction to the jobs data. So a little bit of a miss on the headline, but all told, you know, we did get some wage growth and at least hours weekly held steady, if not grew.
Yeah, I think it was, leaning slightly disappointing. You had the miss on the headline, net negative revisions, although even with that on a 3-month moving average, non-farm payrolls were up over 200,000. So clearly we're still seeing expansion in the labor market. The unemployment rate held at 4.1%, but the underemployment measure, that U6 measure, did tick up to 8.1%. And wage growth, even though we got the month-over-month number we were anticipating, the year-over-year number still only at 2.5%. It's pretty much where we started 2017. So we ended the year pretty much where we started when it comes to wage growth. So not much of an acceleration there. And that, to me, is going to be the big question for this year. Will we actually see those dynamics change where the drop in the unemployment rate, which I think should persist, actually translates to some upward pressure for wage growth?
And I know you updated your economic projections just in the last few minutes for 2018. So perhaps you can tell us what those projections now are and maybe illuminate for us why the work week isn't going up and why employment costs aren't going up.
Sure. So we did a whole rework of our economic forecasts to incorporate tax reform. And what that resulted in is stronger near-term economic growth. We took real GDP growth up this year to 2.7% from 2.4%. We think next year will come in at 2.2%. Our prior baseline pre-taxes was 2% growth. So stronger growth this year and next. However, and importantly, we did not change our estimates for long-run GDP growth. So we think potential growth is still 1.7%, which means the economy this year will be exceeding potential by a full percentage point. And we do think that that ultimately does lead to a tighter labor market and some price pressures to build. So for core PC inflation, by the end of next year, we think we will be above the Fed's 2% target, coming in right at 2.1%. The Fed, I think, is still in an environment where for now they're going to be communicating a gradual normalization policy, and that was quite indicative in the minute. So we think still the baseline forecast is 3 hikes for this year. The risks do shift towards 4 with tax reform, and we think for next year they'll similarly hike 3 times.